Exciting stuff this week. Bank of England has cut interest rates. It happened, which is great. How much further will they fall? And house prices still going up. How much longer can that continue? The other questions. So interest rates cut to 4.5%, lowest point for 18 months. How much further will it go? 5 straight months of growth. Signs are emerging that the UK property market might be slowing, with mortgage rates shifting, affordability stretched, and the stamp duty headline on the horizon. Could it be heading for a turning point? Is it time to consider our positions, as Tiny Rowland said? So the key points: the Bank of England cut rates 0.25% to 4.25%. Now, a lot of people were expecting that, even though I was surprised myself. But what they weren't expecting was that a number of the Monetary Policy Committee, and it's 7 of them, were actually pushing for a 0.5% cut. So they were looking at 4.25%. Why are we looking at that? I think we're looking at really what's going on in the UK economy. It's stalling. The Bank of England said that the Labour government's economic incentives will come through, but it's going to be 2 to 3 years or even longer before that happens. And if we wait for that, then the country will go into recession. So it's actually slashed its growth forecast for GDP from 1.5% to 0.75%. So hence, it's starting to cut interest rates, and a number of the more dovish, as they say, people in the Monetary Policy Committee are saying, let's just not stop there. Let's go further. Let's cut more, because we're going to need it. What does it mean for us, for investors, for the average person in the street? Obviously, it means more money in your pocket, lower repayments. It means there's been proactive support for the economy, which is good. It's a pity that the Labour government can't do that as well. Also, it means confidence is building. Confidence will build in the market. And I know you look at all the comments we get on this in this format, and there's a lot of negative people out there saying end is nigh. Forget it, I talk rubbish, I'm too old to be talking anyway, all those things. But you forget, I might well be old, but I've got 35 years of experience doing this, and I have seen this happen many times where the end is nigh, and actually it's not. So what does it mean? It means if confidence improves, the market will improve. What effects does it have on interest rates? Already HSBC, Barclays and Nationwide have cut their rates. Aldermore, Santander and Virgin Money are saying they're cutting theirs. And Barclays actually cut them by 2.25% before it came out. So there's a lot of good rates being cut there. Now, house prices, will they continue to go up? According to Nationwide, house prices rose by 0.1%. The annual growth slowed to 4.1, down from 4.7 in December, showing signs of softening. Now, it's only just one way of measuring the market. There are many others, and you can't just take one company and as their figures as gospel, because it just doesn't work. But one is saying that. Okay, 1.1 million transactions in 2024, 8% more than 2023, but still below the pre-pandemic levels. Stamp duty changes in March, that will drive stuff up because people don't want to try and get through before that and avoid paying extra stamp duty. What's happening in the mortgage markets? Gilt yields, affordability. Well, gilt yields have bounced on the back of this cut in interest rates, as you can imagine. They hit the highest level since 2008. More Bank of England interest rates may be forecasted. I think Andrew Bailey said they had to be very circumspect about what they were doing, especially with inflation potentially going to 3.7% later this year. And if that is the case, instead of everyone's expecting 4 rate cuts, it won't happen, which means that mortgage rates will stay at this fairly high, as many people see it, position, despite the fact actually 4%, 4.5% is not that high. It's just how it is comparative to what your experience is. House price to earnings ratio of the first time buyers is 5 times income, which is well above long range average of 3.9 times, which means affordability is well stretched. First time buyers now need 36% of take home pay for mortgage repayments compared to historical average of 30%. That is expensive. That's hard for new starters to get on the market. Very difficult indeed. Regional trends, Scotland's showing the way. I think it's West Dunbartonshire, Inverclyde and Moray were all up by more than 7%. South West England is having a difficult time. Torridge, North Devon and Torbay were all down by at least 4%, in some cases 7%. London house price sales at the highest level for almost a decade, which is again bizarre because they are so expensive, but it just shows that the capital is still a major draw for many workers, and they want to go there. Key risks and uncertainties, as we'd call it. Housing market is resilient, but affordability is a big problem. As many of our listeners who comment, or watchers who comment, say that there's a crash about to occur. I don't personally think that is the case, and that's what my 35 years of experience tells me. but we can all be wrong sometimes. It's what you don't know that trips you up, not what you do know. Impact of stamp duty will have an effect, and I can see short-term house prices going up while people rush to get in. But I do believe we'll see rate cuts cut, even if inflation is going up, because they need to stimulate the economy. And if rate cuts occur, then people will be more confident about buying property. Certainly, we have seen it over the last month at APW Towers. People are still coming into the market and buying. That's mostly with a 30% plus deposit to make sure they can wash their faces easily, and it's mostly in the higher growth areas where you can get in with a 6 or 7% rental yield, which is in the main in the Midlands, the Northwest and the North. So overall picture, great that rate cuts have occurred. It would have been great if they'd been bigger. I think it will happen. We will need more of them, so that'll occur. And then I'd like to just cover some questions if I can from the past few weeks, some statements and the like. Okay, we have a lovely comment here from Thoughts Made Real. I'm totally traumatized by years of private renting in the UK. University students will never be able to buy a house. They're leaving the country in droves. Good choice, otherwise they will get to 40 with nothing to show for it after years of work, paying tax and other people's mortgages. The system is betraying the younger generations. Yeah, it's a free market economy, and what we're having is the market going up. People are making more money around the world from the British market, and it's meaning that university students can't get into it, young people can't get in. And unless you've got access to the bank of mum and dad, you know, it's quite a difficult place to be. It's not just a British thing though, I think it's a global thing. I was talking to Singapore this week. I was talking to a couple, and they said, you know, you've been in Singapore a long time, you know, how has the market changed? And so when we moved out to Singapore, there was a very few number of wealthy people, there was a huge middle class, and then there was a small amount of poor people. Nowadays it's a bit inverted. You've got a heap of wealthy people, you've got a shrinking middle class, and you've got a growing lower level. And that's not a criticism of Singapore government or anything else like that. It's just the way it is. Free market economy seems to work, and we see that everywhere. If you look at the UK, you see the same. I think you see it in Australia, New Zealand. It's just the way things are going, and you know, you can't buck what the economy is trying to do, the free market economy. So this is what's happening in the UK. It would obviously be far better if you had lots of incentives from people like the government to actually create affordable property, to put money into it, to subsidise builders to make affordable property that people could afford to rent. That would be a far better idea, but it doesn't seem to be coming forward. Thank you for that. Thoughts Made Real. Bond It Limited. Not heard of the Big Mac Index, we'll look into it. I've noticed rents have stayed roughly the same in Manchester, so I'm waiting for the Labour Renters Reform Bill. I'm waiting for market changes and the Easter budget. The Renters Reform Bill, if you're looking after your clients and you have a proper solid property, shouldn't be that big a deal. Look after clients, they'll look after you. As I always say to my clients, the hardest thing to get are good tenants and a good manager. If you have both those things, and I've said probably you bought a property that is rentable and respectable, then you shouldn't have too much of an issue with it. Easter budget, what will they introduce? Rent controls? Rent controls were introduced into Scotland and rents went up by 15%. Rent controls are common in France. And what happens is French people are leaving the French market for rentals and buying in the UK. So it's pushing up UK prices, but they can get here. They don't get the rent controls here. I think in France it's 2% maximum. And then finally, Marcus, larger landlords are buying right now while small landlords are leaving the market. Tells me everything I need to know. Yeah, I think there's some good points there. I think larger landlords are buying in. But you know, 30 years ago when I started doing this, people would come to me and want to buy a second home, they'd want to buy a rental, they want this or that or the other. So there wasn't much property going on as far as buying for the future. Nowadays, virtually every third person I meet wants to build up a portfolio over the next 5 years, or 5 properties a year, or 1 property a year for 5 years, to create an addition to their pensions. That's what people are doing. So the professionalism in the market has improved a lot. Smaller people are getting squeezed out for sure. You have to be a lot more professional to do it. It's not for the faint-hearted, so don't get involved in if you think you're not strongly driven to become a landlord. So that's it for this week. Thank you very much. Do register for our ebook. It's going out like hotcakes. It's got some top tips in there, and do look up for more versions in the future. Thank you very much. Take care. Bye bye.